And with real estate, you get much better tax benefits. It's not even close compared to stocks. With real estate, the reason why you get better tax benefits is because the government wants you to invest in real estate. They could really care less if most people invest in stocks. It's not really going to make too much of a difference if I go and I buy $100 worth of Apple stock. The government doesn't really care about that. The government does care if I save a few hundred for a few months and I put a down payment on a property, then I rent that property out to a family. That directly impacts the economy positively, right? So the government incentivizes certain behavior with tax benefits. That's really the point of the tax code. The middle class, unfortunately, tends to be penalized the most because, in a way, they are not as valuable to the economy as, like, say, a very, very wealthy person, case by case. So if you take one ultra wealthy person that is building factories and building developments for people to live in, the government isn't going to value just someone making $70,000 a year in a middle class job as much as that person. So it's a case by case, right? And then if you even go, and I have a theory for this, if you take someone on the lower end of the spectrum, I think that sometimes corporations and organizations value people on the lower end of the spectrum more than the middle and upper middle class. And I think that a lot of the times they try to put them against each other. They try to put the middle class against the poor because the rich need the poor to work in their factories, to flip the burgers. Everyone's always talking about, oh, why doesn't school teach us financial literacy? Because they don't want everybody to be financially literate. Someone's got to flip the burgers, someone's got to make the pizza, someone's got to do the cashier at Walmart. Everyone's got to do these certain things. So really my point to that is the government incentivizes certain behavior. And if you can learn small bits of the tax code, right? Okay, cool. If I do this, I'll save on taxes, XYZ. Do that and you'll save more money and you'll build wealth significantly faster. So again, real estate is a lot more tax advantaged than normal stock investing. But on the flip side, with stocks, you get much greater appreciation. And by appreciation, I mean that your money is going to grow significantly more. The S&P 500's averaged over 10% per year in the past 30 years. And the NASDAQ, which is tech stocks, have averaged 13% a year over the past 20 years, which is really, really good. That's almost triple the amount of appreciation that real estate's going to get. With stock investing as well, you can also still get dividends. So if you buy something like Coca-Cola, or if you buy something like, let's say, Lowe's or Home Depot, all these, they're called blue chip stocks. They're solid, they are established, they're going to pay you a dividend. So a piece of their earnings they give to you as an investor. And you can actually live off of these dividends if you build up a large enough nest egg, right? Think of it like a tree, right? You have $1 million when you're older into dividend stocks. That is the tree. The fruit is the dividends. So the tree is, your Coca-Cola, your Hershey's, all these safe, solid dividend stocks. That's the tree. And then the fruit, the apples, the oranges, all this stuff is your dividends. So you got $1 million with the tree, and then with the dividends, you got 5% here, you got 7% there, and let's say you average out to 6% for your dividend rate on $1 million. Well, that's $60,000 a year. And if you invest right in qualified dividends, you can get significant tax benefits as well and not have to pay much tax on that. So it really just depends on your strategy. Some people only focus on one, some people only focus on others. I think invest in both, right? The most wealthy people, like the Bill Gates and the Bezos, all these guys, they invest in both. So they're buying thousands of acres of farmland and they obviously own tons of stock. So I would say do both. Don't just put yourself in a box, right? You should specialize in one or the other. And honestly, I think that you can learn enough to be quote unquote specialized in both of them. Like, I don't think you have to choose one or the other. I think that you're missing out if you're not invested in stocks or real estate. And I think if you're only invested in real estate and not stocks, you're getting outpaced. Like, you are not going to be as wealthy as somebody that has money in stocks. And you're significantly not going to be as wealthy as somebody that has money in stocks and real estate. The reason I say that, we just have to do some quick math. Let's say you have someone with $10,000 in the S&P 500, 10% a year over 30 years, they're going to have $1 million by the end of that. They're going to have more than $1 million by the end of that. If you have somebody that just has $10,000 on a rental property, we just gave the example, $200,000 on a rental property, and that's the cost. So 10,000 down, and the value of the rental property is $200,000 over 20 years. We just gave the example that property is going to be worth $500,000. Let's say even 30 years, like the example we gave with the stock, that property is not going to be worth $1 million at the end of the 30 years, right? But you're getting rent, you're getting all these things, you're getting tax benefits with the real estate. So really, the point of this video is, with stocks, you're going to get greater appreciation. Your money's going to grow faster. With real estate, some people would argue that it's a little bit more safe and secure. You get more leverage with real estate, and you get tax benefits. And with either one, if you play your cards right, you can do better in real estate than most people do with stocks. And if you play your cards right with stocks, you can do better than most people do with real estate, because there's so many different creative ways to make money with stocks and real estate. You can use options where you're taking on even more leverage. You're pretty much 10xing your capital whenever you're using options. You're getting about 10 times leverage. And when you use futures contracts, you're getting about 20 times leverage or more sometimes. And with futures contracts, you actually get tax benefits with that as well. So with futures, 60% of your income, 60% of your capital gains, instead of being taxed at short-term capital gains at up to 37%, you're going to be taxed at long-term capital gains about 20%. So you're getting significant tax benefits. So if you are trading stocks or you're interested in the stock market, you want to learn futures, because you can trade S&P 500 futures and NASDAQ futures and other stock index futures and get exposure to the stock market while getting significant tax benefits and not having to pay a large chunk of that back in the form of taxes, right? In terms of headache, I honestly think real estate has a lot more headache involved with it. More millionaires are created with real estate. Andrew Carnegie said about 90%. I'm sure that's down to like 70% now, give or take. We should do a study on that. That'd be interesting. But yeah, the reason why is because you get more leverage with real estate. So it really just depends on your lifestyle. You can invest in real estate passively as well. You don't have to be a burnt out landlord. You can just get a cool solid 12% just giving your money to an operator or one of these active investors out here, and like myself, and there's tons of people in the area that will take that money, they'll grow it for you, they'll give you 12 to 20% on your money, right? And I'm eventually looking to transition into passive investor status, but I know I have to pay my dues and I have to learn, and I'm an active investor right now. I know that I have to continue to put in the work. But with that, you can just do passive investing. There's sites like Fundrise where you can actually just get a solid like 13% just putting your money away. It is locked away for a bit, but with that, you know what you're getting. And a lot of the times, if you're a passive investor, you can have the real estate secure your investment. What I mean by that is there's a promissory note. All that means that if something happens and something happens to your money, you can actually go after that real estate and you can get paid out on the sale of that real estate. Stocks can go to zero. Look at 2008. You have Bear Stearns, you have Lehman Brothers, you have all these companies. I mean, just go look at penny stocks on Robinhood or whatever, and you'll see some of these stocks are like $1,000 10 years ago. Now they're worth 90 cents. That's someone's wealth evaporated, right? People say you can't go broke buying stocks. That's a lie. Thousands and thousands and thousands of companies have gone to zero. I mean, most companies don't make it over the long haul, right? There's something called the Lindy effect. If a company or really anything has been around for about 10 years, then it has a significantly higher chance, I think around 90% chance of staying in business longer. So if you're going to put a large chunk of your money into something, I would recommend making sure that it has been around for at least 10 years. You can do startup and venture capital, but make sure you're just putting a small chunk of your money into that. With that said, though, I hope y'all learned something about the benefits of investing in stocks versus real estate. Please comment below if you have any questions. Please share this to somebody that you could think could learn about investing, because you will not get wealthy, in my opinion, if you're not invested into either stocks or real estate. You have to be invested into one or the other, or even better, both. You might get lucky with some cool business idea or something like that, but most millionaires are created through real estate investing. That has been established through decades and decades, and the numbers are there. You know, go to investmentcalculator.com and you can run numbers on an investment over time. But yeah, please share this with somebody, and don't forget to enlighten and empower. Let's go.